Sorry, everybody. Traffic was Airline Drive-esque. So, thank you, Mr. President. Call to order the Finance Committee meeting for Thursday, February 20th here at the BIC. Myself, this is our first finance meeting of the year, if I'm not mistaken. Myself as the chairman, Mr. Glenn Bullard as a vice chairman, and this is also a committee of the entire board, just because of the business at hand. Go ahead and get started with agenda item number 1. Discussion and possible action, presentation of the financial and single audit report for the Bossier Parish School Board and the AUP report for the Bossier Educational Excellence Fund, presented by Allen Green and Williamson, LLP.
Good evening. My name is Cindy Thomason. I'm with Allen Green and Williamson, and it's been my pleasure to be the firm designee for the audit of the Bossier Parish School Board. It's a great pleasure that I have to announce that the purpose of an audit is to give an opinion on the financial statements and compliance over grants and laws and regulations. And our opinion on the financial statements is what we consider an unmodified opinion, and that means that we find it materially correct in all, fairly stated in all material aspects. First, what we're going to discuss is the financial audit, and we'll start with this book here that's on your thing. And I know that Ms. Bamberg emailed this to you in your packet, so y'all have had an opportunity to look at it. So stop me at any time that you need to ask any questions. Our independent auditor's report starts on page 27. And on 28, we actually give the opinion saying that we finally, that it's presented fairly in all material respects. Governmental financial statements is really based up of two sets of financial statements. One we call the governmental activities, and this is presented on what we call a full accrual accounting method, and that has all your assets, all your liabilities. That's presented mostly like a business would produce their financial statements. And those statements begin on page 46 and 47. But there's a synopsis of these two financial statements in what we call management's discussion and analysis, which is on page 36 and 37. On page 36 and 37 in the MD&A gives a comparative schedule from the prior year to the current year. And so we kind of can look at it from that aspect. So overall, the school board ended up with a deficit net position of $361.1 million. And don't get alarmed, most of that deficit is with the OPEB liability and your net pension liability. And these are liabilities that the school board will probably liquidate way near into the future. And it's not based on anything that y'all budget on or anything like that, but it's just kind of showing the users of these financial statements what your overall obligations would be. It also includes your capital assets. And your capital assets, they actually increased this year, 6.9%, and that's mainly due to your ongoing construction projects that y'all have going. But also, this has also been funded by debt. And two key notes that you may want to look at that I think are very useful in putting those financial statements in perspective is on page 74. I'm sorry. No, I interrupted.
I held my tongue for a minute. I should have spoken up sooner. Our deficit position, that is not unique.
No, sir. No,
And
sir.
let's just clarify, every school board in the state, with the exception of maybe a couple of brand new ones, new being 5, 10 years old, they're all in the same situation.
Yes, because
unfunded accrued liability.
yeah, a lot of it is you're taking what they call a net proportionate share of the teachers' retirement system's deficit. You know, they have they're underfunded, and you have to take your net proportionate share, and it's based on your employees and your retirees. You get a proportionate share based on your contributions to the plan.
So, in given your knowledge of this situation, we were told that earlier this week that the teacher's retirement aspect would be resolved by the end of 2020, by
2040.
2030.
2040.
2040.
2040, half of it.
I think so, that's a lot of things to make up in a couple of years.
Yeah.
But the other large liability that does give you that deficit is your OPEB liability. And I don't know if you realize this, but this is Bossier's actually will liquidate, and that is for the health insurance that you provide your retirees. And this is based on, this liability is based on your current employees, even though they're not eligible, but what they've earned to date, plus your retirees and the health care, then that cost. And of course, now it's based on a actuary. It's highly estimable, but that will be something that will be actually have to be liquidated by the school board, way into the future. So anyway, on page 74 is your capital asset note. And this gives the detail of the capital assets that is available and usable by the school board to provide education to its students. It just kind of gives the listing of your lands, your ongoing construction progress. At the end of the year, y'all have $49 million in construction ongoing. And then, of course, in buildings and furniture, and that's what can be used in your purpose of educating students. And then the other important notes on page 84. And this is the long-term debt note, and it just kind of gives the details of your general obligation bonds that you'll have outstanding at the end of the year, which is $154.8 million. And of course, plus you have some premiums and some the QSCAB revenue bonds to add to that. And then it just shows that you have $11.8 million in compensated absences, and that would be if everybody quit today, this is what you would have to pay out to pay what they've earned to date in compensated absences. And then your claims payable, that is what is remaining of your self-insurance for your workers' comp. You're no longer self-insured for workers' comp, but that's the residual. And for your general liability, the portion that you're self-insured. So that's all I was really going to discuss on the governmental activities, unless anybody has any questions. Because we'll get to the ones that, the other set of financial statements is your governmental funds, which those begin on page 50. And what we display here is what we call the major funds, plus the aggregate remaining, which is called the non-major governmental funds. And these are always consisted of your general fund, plus any fund that has 10% of either assets, liabilities, revenues, or expenditures. And this year, we present your sales tax fund, your Bossier your B fund, and your bond construction fund. And at the end of the year, the total fund balance for the school board is $129 million. And of this amount, $37.1 million is what we consider unassigned fund balance. And that's the balance that the school board can use to meet its day-to-day ongoing obligations. The rest of the funds have been set aside for a specific purpose or restricted by grant or legislation, like your ad valorem and your sales tax. They're restricted for a specific purpose. You have $18.2 million in debt that's reserved for debt service. That is your fund balance that you have restricted strictly to pay the bonds when they come due, the bond and interest when they come due. You have $17.2 million that is restricted for capital projects, and that is the residual fund balance in your capital project fund for your, those are the remaining basically of your bond proceeds that you've issued to date. You also have $53.4 million in beef permanently restricted. Those are the accumulation of your gambling proceeds. And that money that is sitting there, you can't spend it. It's not usable for any purpose other than to earn interest. And then the interest can be spent on education enhancement. And, you know, of course, we have specific guidelines on what you can spend that money for. And then the rest of it, you have $1 million that's reserved, assigned to debt service. This is assigned from the general fund, and it's used to set aside the amount that you're going to pay for the QSCAB bonds as they come due each year. And then you have approximately $1,000 that is restricted for or committed for salaries. And then $1.2 million of beef that's still it's accumulated that can still be spent on education enhancement. Any questions so far?
Some board members might know the answer, and Ms. Bamberg, this might be to you, but I know we are required to keep a certain amount in our reserve fund
I was going
on
to
a
get
percentage basis.
I was going to get to that.
Okay, so when we get to it, I want to know if the 53 million in beef funds is calculated, if that's added to the total and then the percentage is used based on that. So that's out, so we don't have to keep a percentage of that in our general, okay.
Okay, the fund balance percentage that is you're supposed to keep reserve is strictly for the general fund.
Okay.
So it would only be in the column for the general fund.
Okay.
And so at the end of the year, the unassigned general fund balance is $37.3 million. That is either that's like 17% of prior year of the current year expenses, or you have in reserves of unassigned approximately 2 months of fund balance for 2 months worth of expenses. And of course, you know, your school board does have that minimum fund balance requirement, and it's 12% of budgeted expenditures. And the final, comparing the final budget to your actual unassigned fund balance is 16%. So you're over the 12%. And it's basically, the way I understand the policy is, it's really based on next year's budget. So next year's budget can't be more than 12%, no, less than. Yeah, then 12% of
The fund balance can't be less than 12% of
the expenditure, yes.
So
you've complied with that.
our unassigned here in the general fund, 37.3 million, that is what I would refer to as our reserves, yes? No? Okay. And then of that, we must maintain 17% of the current year expenses or 2 month?
No, that's what it is currently. You have either 17, your unassigned fund balance represents 17% of last year, of 2019's expenses.
And we must maintain 12%.
And you're supposed to maintain 12%. Or it represents, basically you have 2 months worth of reserves of expenses if you continue to spend at the same level.
Mr. Chairman,
Right.
the way that policy I think is written is it's 12, but we make every effort to keep it at 15 is the way the policy
Well,
is
but
actually written, right?
the bottom line is 12, and that's what we test as
Okay.
an auditor.
12, okay.
The board, you're correct, the policy reads that you're committed to the 12, but you're committed to shoot for 15%, which if we're at 16, then that's in line with the
And And just to clarify, you would prefer us be at 16.2 months worth of reserves?
The 2 months of reserve is the legislative auditor's best practice recommendation for the school board.
And-
Which would be at what percentage?
16.7%, which is probably right around.
I think you're just slightly over 2 months. The overall fund balance for all the funds actually had a decrease of $15.6 million. And the main reason for that decrease in your overall fund balance is because you're spending those bond proceeds that were received in a prior year was spent on construction during the current year. Because you actually had you spent $23 million out of your bond construction funds. That was that decrease that you spent last year, and that's contributed to that $49 million that you have in construction in progress. The general fund actually had a $5 million increase from the prior year fund balance to an ending fund balance of $38.8 million. And as we said, that represents about 2 months. If you take them all total, it's more than 2 months. But we use the unassigned because that's what you can use to meet your day-to-day obligations. Of course, we also increased your Beef Excellence Fund. We received $2.9 million in gambling revenues last year. And like I said, of that, we can't spend, but we also earned $1 million on that gambling funds to be spent on education excellence. Other key factors is, that you received $47 million in sales tax that's helped to use to supplement your salaries and benefits for the school board employees. Any questions? The other fund that we talk about that's not presented in here is your internal service fund, which begins on page 59. And this fund is used to accumulate the resources and expenditures for your self-insurance, your medical plan, and dental plan. At the end of the year, the school board had accumulated $10.5 million that can be used for medical insurance expenses. Not insurance, but insurance and medical claims. Last year, you received $51 million in premiums. Part of that's met by the employee, and then the school board and the other funds paying the other portion. The operating expenses, which includes the insurance and administration costs, plus claims of $44.4 million. So you had an overall increase of $3 million from the prior year to an ending fund balance of $10.5 million.
Continue to circulate in that fund to pay out as those expenses are incurred, and then?
Yes. We did note that the fund balance is getting to be, or the net position is getting to kind of large. This is supposed to be like a cost reimbursement. It's really not supposed to be. You're supposed to have some reserves. So we have recommended that that we reduce that over the current fiscal year.
Can you bring recommendations to myself and the committee as to what an ideal operating range would be for this fund, please?
Yes, sir, I know what she's talking about. We did have a couple large claims that we were expecting to come in. I've already talked to Jason Allman about those, and so we are making a plan to make sure that we stay within the range that we need to be on that front.
And then I'd like to address anything that would be outside of that range. We'll have some conversations around that.
Yes, sir.
Mr. Bullard?
Thank you, Mr. Chairman. We do, and I'm sure Ms. Bamberg will, if she hasn't already, will be addressing in this line. We review annually our premium schedule, and if we have surplus, then we can adjust downward, so as to maintain that
Yes, sir.
steady
Yes, sir, that is
position.
always a consideration. The concern is if we go down and then the next year we have to raise the premiums on the employees.
Understood.
We have to change it. We have not changed premiums since 2015. We haven't raised them at all. We haven't touched them since 2015. And that's trying to keep it consistent for the employees. But we are definitely looking at what we can do to make sure that we're offering the best health insurance at the best price for our employees, because that is a major draw.
Thank you.
Any more questions? And then the last financial statement is on 62, and that's the fiduciary. This represents your student activity funds and the accumulation. You have, the total of the school activity funds has 3.7 million. And if you want the breakdown of what makes up that $3.7 million, it's on page 126. And basically, this is the ending cash balance at each school for their student activity funds. On page 103, 102 and 103, this kind of gives a synopsis of what makes up that other column called non-major governmental funds. And it shows you have three types: special revenues, and those are the funds that have a special revenue stream, such as your Title I, Title II, and your other federal grants, plus school lunch. The second column is debt service. These are to account for the ad valorem that's collected and the expenditures for the debt service, which is your principal and interest payments as they come due. And as we said, we've accumulated $18 million for to pay the next year's debt service. And then capital projects. These are the column, I know it's 0, but these are some old capital projects that hasn't been used in several years. And what the residual of those have been transferred to the 2012 construction fund, so to consolidate all those money for your ongoing construction projects. There's a detailed breakup of the special revenue funds. And on page 108 and 109 kind of gives the details of the revenues and expenditures for those funds. Like I said, most of these are cost reimbursement funds, which are, you get your grant award, but they're expenditure driven. So once the expenses have been made, you're reimbursed. So they end up with no ending net fund balance. I guess the key one that I want to bring to your attention is your school food service fund. It had an ending fund balance of $1,500. And as you can see, the other funds we had to transfer in, and I think mostly that was from the sales tax fund, I believe. General fund and then the sales tax fund. But you had to supplement your school lunch program $1.6 million. So just wanted y'all to be aware of that. And the other one with the ending fund balance is the Louisiana Educational Excellence Fund, and those are like the tobacco funds, and you get a certain grant award from the state each year for those funds.
Why did we supplement the food services by 1.6 million?
That's a common practice. All school boards have to supplement the school food service. The reason being it's the general nature of the program itself. You want to keep meal prices low so that your students are able to eat. Really the only districts that are not having to have major supplements to the child nutrition program are districts that are fully CEP. CEP tends to make a lot more money, and the reimbursement rates are a lot higher than they are for the free and reduced lunches. And so your CEP districts can normally get around where they're not having to supplement as much. Now, we are required to give a certain amount of NFP. We give above that amount as well as talked to the John Nutrition Program, and I can tell you they are very diligently working to get the cost down so that we're not having to supplement as much as we've had to in the past. So they are very diligently working to examine those costs.
Okay, thank you.
And the other thing I would just want to bring to your attention at the end of the CAFRs, what we call it, is the statistical tables. You know, y'all should all look at that. It does provide a lot of interesting information about Bossier Parish and the demographics and the school board within the parish. Huh?
What page is that on?
It begins on page 131. And it kind of gives a synopsis of the past 10 years, because you can show how the growth has gone, and also has student capacity and utilization based on your buildings, direct and overlapping debt activities with the other governments within the parish. It shows the property taxes levied and collected, sales tax, over the past 10 years. I thought it was useful. A lot of people don't realize it's back there. So any questions on the financial statements? I know I'm going over it fast, but Anisha has my number, and also our firm number is on the letterhead within these reports, and you're more than welcome to call me at any time. The other part of an audit is what we call our compliance audit, and this is the one called the single audit report, and every entity that receives over $750,000 in federal funds has to have what we call a single audit. And our letters begin on page 5 of this report, and we won't read it, but pretty much we have to give an opinion on the major fund that we test each year, and we have to give the results of our compliance audit. On page 10 and 11, that is what we call the schedule of expenditure of federal awards. This gives the detail that of the federal dollars the school board has received during the fiscal year 2019. It shows the name of the grant, the CFDA number, and the amount of monies received. And so for 2019, the school board received $22.3 million in federal assistance. Of course, the major grants that you receive is in school lunch. You receive $6.7 million in school lunch assistance. And then, of course, you know, your Title I and special ed are the other two large grant awards. Any questions? And so based on this CFO, you know, there's different types of, we have to type them. Any grant award over $750,000 is what we considered a type A grant award. And so we have to determine what is a major fund based on that and a certain rotation. So this year we had to test Title I. But our, the summary of our audit results is on page 13. And on the top, you can see that on our financial statement audit, you know, we gave the audit report issued was unmodified. As we said, that's a clean. There was one significant deficiency that we disclosed. And this significant deficiency was considered a material weakness. We had no significant deficiencies as defined by the uniform guidance. So we found no deficiencies in your Title I program. And of course, the dollar threshold was $750,000. And so we get to page 14. This is the one finding that we had to report this year, and it's over internal controls over financial reporting. And due to the significance of the journal entries and the audit adjustments we had to make, that's why we considered it a material weakness. And the details of the finding is there. I'm not going to read that to you, but if you have any questions about it, you can ask me.
With this being a material weakness, is this something that we are working on fixing? Is that, or do y'all give us
Yes,
what
ma'am.
we
Yes,
should
sir.
do?
It's my understanding that the most of the issues that we noted in this finding has been corrected or working toward being corrected to date.
Okay.
The biggest parts of the finding have already been corrected, and we are working, we're setting it up to make sure that there is no discrepancy before you're in. Unfortunately, it is a repeat finding, it's one we've done before, but we definitely feel like we're not gonna have the same level of issue next year.
Okay.
Hopefully, it's not.
All right, thank you.
You know, and the main reason that, considered as material weakness is because the board makes decisions based on the financial statements. And because of these issues, we felt like the board wasn't presented with accurate financial statements. And, when we have materiality levels, and when it's something exceeds that materiality level, then it's considered material weakness. And it does consider that you are no longer a low-risk auditee as far as the single audit is concerned for the next 3 years. So instead of testing 20% of your federal dollars, we have to test 40% of your federal dollars.
Probation for 3 years, or?
Well, no, that's just the criteria in the single audit and determining if it's a high risk or a low risk, is that you can't have any material weakness in financial reporting in the past 2 year look back. So it's really for next year and the next 2 years after that.
The one thing you did say, this affected the accuracy of the financial statements presented to this board. Did I hear you say that correctly?
Yes, sir.
Any idea to what scale or scope it was out?
It was only in certain funds, is my understanding. There were a few entries that affected the school.
It was actually just in the biggest one was in the internal service fund, the medical insurance fund.
Correct. It was one entry, and to tell y'all, what she's talking about is one entry. And it's one entry for the internal service fund. And so if you received any, or what financials you received during the year on the internal service fund, they had actual numbers, not budget numbers, but actual numbers for the internal service fund for 18-19. There was a number that was off because a journal entry was made. The journal entry was found correctly, but it wasn't found incorrectly timely, or what was considered on a timely basis. And so it was a large entry. It was a key punch error, but it was a large entry.
Okay, thank you.
And seriously, that's all it was a key punch error. A number was entered twice, but it wasn't caught and corrected timely. The other thing that I want to bring to your attention, we do have a management letter item, and it is most of this is required by, this begins on page 22, 22. Just to bring to your attention, one of them is just that according to the legislative auditor's rules, we had to report the simple theft of school funds. These are actually something that you as a school board found. You reported it to the legislative auditor and the district attorney, but by the state governmental auditing standards, we had to put this in the audit report. And the other management letter we had was attendance records. It's just that school employees should document their daily attendance and leave. Any time that an employee, a governmental employee is paid out at leave, or entitled to leave, you have to keep record of your attendance. Not just your leave taken, but your attendance records. And this wasn't done, basically, it's done at the school level, and correct, it is not done at the school board office. And so we just wanted to bring that to their attention so you could correct it going forward. And then the other one is on page 25, just shows the results of applying our statewide agreed upon procedures. I won't read those, but if you have any questions, you can call me and ask me about any of the findings that we had. The agreed upon procedures is based on a specific set of, I guess what I would say, rules. We have to test according to what the legislative auditor wants us to test for. And so any deviation whether it's wrong or not wrong or different, we still have to note it as an exception within our agreed upon procedures report. And then on page 31, we also are engaged to do, according to the legislative auditing guide too, is applying agreed upon procedures on what we call the BPSB report, and we found no exceptions there. And then you also received in your packet was the results of our agreed upon procedures for the Beef Excellence Fund. And we found no exceptions there. And the main thing we're testing there for is that you're not spending more than you earned within the calendar year of interest, and that the principal is staying intact and you're not spending the principal. And then the law also states that you can only invest in certain type of investment instruments, and we're making sure that you comply with that. And we found no exceptions. But, we basically, there's a law that was passed for the school board to receive those funds, and we're just testing to make sure you comply with that law. So, any questions?
So you do this for a lot of school boards. Is there anything that, in your opinion, that we should be concerned about on this? I mean, I understand the key punch error and reconciliation is one deal, but.
And I'll be honest, this has been a repeat finding for the last couple of years, and I've been stressing, and we've been making progress each year. It's getting lesser and lesser. In fact, when this finding originally took place, and I can't remember, probably about 4 or 5 years ago, it was a material weakness then. But it's evolving and getting better each year. And so I think under the helm of Nisha, that Ms. Bamberg, that I think she's got a lot of this under control now.
Okay, thank you.
And going to the master bank, that was one of the things that I think has been helpful too. And my other recommendation, and I've made this too, is you have this new accounting system that we need to be utilizing more of its functions that could be essential to streamlining some of the work even.
Okay, thank you.
All right. Mr. Downey?
I met with Ms. Bamberg several times to discuss these findings with her and Ms. Thompson, and we've addressed these issues thoroughly. We put checks and balances in place to assure that this doesn't happen again. And we've had conversations with the people involved to make sure that they understand this is a priority moving forward. And I agree with Ms. Thompson. I feel very confident that Ms. Bamberg has done what she needs to do to correct these and move forward.
Mr. Blockhouse?
Coach, we implemented new ways of handling cash money at the school level just recently, didn't we? And this ought to help some of these thefts that are listed here.
We did, we kind of consolidated our school activity fund policy, went back through that again, and since Ms. Bamberg was come on board, we've actually got to streamline some more of that into the agreed upon procedure with the legislative auditor, and we are slowly, every month, going through doing new, more efficient procedures.
Right. I thought we were, thank you.
Anybody else? Good. Ms. Bamberg, anything you'd like to add before we wrap it up? All right. Well, we thank you for your presentation. Thanks for coming out. That's it. Meeting adjourned.